Hey everybody, Economic Ninja here. We're going to talk about real estate investment trusts or REITs. There's a lot happening in the market. 2 years ago, I started talking against REITs, saying it's not a good investment. Get ready, you're going to start seeing losses because interest rates are rising and REITs were being purchased based on hopes and dreams of yesteryear. All right, well now everything's coming to light, and you're going to see a lot of funds collapse in the next year and a half because of these rising rates, and they can't squeeze blood out of a turnip, for lack of better terms. Check this out. This is out of Seeking Alpha. The State of REITs, May 2024 edition. Now, it says here, just some summaries. With a negative 4.27% average total return in April, REITs have now seen declines in 3 of the first 4 months of 2024. Now, it does take time. Like I said, 2 years ago, I was saying these are not good investments, right? And once you get into REITs, sometimes it could be hard to get out, right? Because a lot of people invest in REITs, accredited investors, they go into the fund, they become part of the fund. And it's not as liquid as a REIT that would be traded on the stock market. So over the last 2 years, if you're buying and selling REITs that were publicly traded companies, yeah, you could make some money on appreciation of those. But when you're into those funds, it becomes a little difficult to just move in and out of them, right? In a good market, yeah, you can find investors. And there's usually a pool of investors that are waiting to pick up REITs. But by and large, especially now, it's not a good time to have these things, right? I actually ran into a subscriber that has some and saying, yeah, they're not performing the way we expected. And I was like, you need to get out now. You need to go and find. It's the greater fool theory at that point. But the problem is a lot of times people are going to have to take concessions on the shares that they have in the REITs and sell them for a loss just to get out from under them, okay? Now, microcaps and small caps averaged low single-digit declines in April, while microcaps and large caps performed even worse. 78.71% of REIT securities had a negative total return in April. 78%. That is massive. I mean, you might as well say pretty much close to, in the next, let's say 5 months, we may see all REITs. All REITs will be negative. Unless there's a few out there that are just now starting to buy properties. They're brand new entities and they're buying properties right with some cash flow right now based off of this current economic situation where we have, 7, 10, 11% rates. There's no such thing as commercial rates that much, sorry. But like the current rate market, right, for commercial. Now, it says only 3 out of 18 REIT property types averaged a positive total return in April. Multifamily REITs were up 3.73%. They outperformed, while timber REITs were down almost 14%, averaged the largest decline. Holy cow. The average REIT NAV discount widened from negative almost 16% to a negative 20% during April. The median NAV discount widened from negative 15.6% to 19.77, a negative number. These are massive changes. In the spring, the idea was discussed in more depth with members. They're talking about trying to get into his private portfolio. So it says April was a tough month in the stock market, and REITs were not spared from the downturn. Equity REITs averaged a negative 4.27% total return in April, which was largely in line with the broader market. REITs outperformed the Dow Jones Industrial Average because that was down 4.9% at that time. Now, right now, you're seeing all of these all-time highs, and it's like people just forget, right? But you have to remember, these all-time highs in the stock market are coming because of inflation. People are searching for yield. They're taking money out of their homes. They're taking money out of their banks, and they're putting it to work. That's one way that the Federal Reserve knows and central banks know. When you have a lot of money on the sidelines, the public, the people in the country have their money in bank accounts. One way to get it out is to run interest rates up, and then people are starving for yield. They go, oh gosh, there's a slight bout of inflation that comes when you raise rates like that because of a little bit of FOMO in the beginning. People grab their money out of their accounts and they put it to work. They put capital to work. So that's why the stock markets are running up. Well, now what you have to be worried about, and I've been warning about this for years because I go, there will be a downturn. There always is. There's always a cycle reversal. You always have to be, as a good investor, be making money in one aspect and be cautious on the other side and have a plan so when things do turn down, you don't lose a ton of capital and then you still have capital to put it to work at much lower valuations, right? That's how you become very wealthy. But right now, everyone's just looking at the all-time high in stocks. Well, a lot of those all-time high in stocks are also people's pension fund money that they can't take out or they'll be penalized and taxed to oblivion, right? So you have to remember, a lot of that money is just sitting in there. Yet there are people that have cash that they deployed to Bitcoin, gold, and silver, things like that, that are going up that they can use right now if they need to. They can deploy that into other aspects of the economy. REITs, this whole concept, idea that REITs are collapsing, I get super excited about because, I teach this to all my students. If you want, I'll put a 70% off link down below, but I'm going to explain that even tomorrow, even more in depth to all of them on a live teaching, because when you see these things collapse, I want you in the position to own multifamily properties. I want you in a position of making cash flow that comes in and you're making money while you sleep. I want you thinking like a wealthy person and not a poor person. Well, to get there, we got to show you how to buy your first house. Then we got to show you how to buy your first rental and then give you the confidence to buy your next 5. Because you go, well, if it worked for 1, it's going to work for 5. And you just methodically start to climb the ladder of cash flow and of assets, building assets. Then one thing I really want to stress with everybody, the most amazing part of this whole plan is I think that you should all become bankers, your own bank. Show you how to pay these properties off and be able to sell them back to other people, and you hold the note and you retain 80% of that payment on the month 1 being interest that you never have to give back. You get it. That's the true goal of this entire thing. So REITs are collapsing. I want you to become the next REIT investor. I get it. You're like, well, why would I do that? It's collapsing. Because the sun's going to come out tomorrow. When everything collapses, you're going to be picking up these assets for pennies on the dollar. I hope you got something from this. If you want a 70% off link to the real estate crash course, teach you about real estate cycles, get you started, it's right there. It's $299. It's 70% off. And I hope you guys have a great day. The Economic Ninja is out.